Based on the historical data and forecast, Bitcoin shows a strong uptrend, consistently breaking through resistance levels. The RSI values have been largely above 60, indicating bullish momentum, with recent peaks nearing 80, suggesting a potential overbought condition. The Bollinger Bands have been widening, signifying increased volatility and potential for price movement. Considering this, I recommend a long position strategy. We will enter a long position at $109,000, coinciding with the initial forecast price on May 26, 2025. Given the recent overbought RSI readings and the widening Bollinger Bands, a conservative stop loss should be placed at $108,000, just below the lower Bollinger Band. Our target price will be $110,800, aligning with the forecast price and a reasonable profit margin considering the current trend. To refine the strategy, we'll incorporate RSI signals. If the RSI dips below 30 during the week, indicating an oversold condition, we'll add to our position at the prevailing market price, with a stop loss placed just below the support level of $106,800. If the RSI exceeds 80, suggesting an overbought condition, we will consider taking partial profits at $110,200. This dynamic approach, combining trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while managing risk effectively. The overall portfolio will be weighted 60% towards the primary long position and 40% towards the RSI-driven adjustments. Based on the historical data and forecast, Ethereum demonstrates a generally upward trend, although with some volatility. The RSI consistently hovers above 60, indicating a bullish sentiment, with readings above 70 for several days. The forecast predicts a continuation of this upward trend, with prices potentially reaching $2,720. Combining these observations with the Bollinger Bands, we can formulate a robust investment strategy. The price is currently at $2,550. I recommend a long position with an entry price of $2,550. The stop loss should be set just below the bottom of the Bollinger Bands, at $1,970, to protect against unexpected downturns. The initial target price should be the forecast high of $2,720, providing a substantial profit margin. To further refine the strategy, we can incorporate RSI signals. When the RSI dips below 20, it signals an oversold condition, suggesting a potential buying opportunity. Conversely, an RSI above 80 indicates an overbought condition, hinting at a possible pullback. Given the current RSI around 69, we are not in either of these extreme zones. However, if the RSI rises above 80, consider taking partial profits at $2,650 and tightening the stop loss to $2,550. If the RSI falls below 20, consider adding to the position at the lower price, with the ultimate target remaining at $2,720. This dynamic approach allows us to adapt to changing market conditions while capitalizing on the prevailing upward trend. Based on the historical data and forecast, XRP has been exhibiting a sideways trend, fluctuating between a support of $2.3 and a resistance of $2.56. The RSI indicates periods of both overbought and oversold conditions, with recent values hovering around 50, suggesting neutral momentum. The Bollinger Bands show that the price is currently near the middle band, with occasional touches of the upper and lower bands. Given this analysis, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels to maximize potential returns. My proposed strategy involves a multifaceted approach. First, when the RSI dips below 30 near the support price of $2.3, enter a long position at $2.32. Set a stop loss at $2.25, below the lower Bollinger Band, to protect against downside risk. The initial target price is $2.45, aligning with the upper Bollinger Band and a comfortable profit margin. If the price reaches $2.45 without showing signs of reversal, consider moving the stop loss to break even, $2.32, and setting a second target price at $2.5, near the resistance level. Conversely, if the RSI rises above 75 near the resistance of $2.56, enter a short position at $2.5. Place a stop loss at $2.6, above the upper Bollinger Band, and target $2.3, the support level. This diversified approach, combining momentum and volatility indicators with key price levels, should generate consistent returns while managing risk effectively. Based on the historical data and forecast, BNB shows a slightly upward trend, with support around $666 and resistance at $684. The RSI fluctuates between 55.9 and 70.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands. Initially, we will enter a long position at $667. The stop loss will be set at $663, just below the support level and the lower Bollinger Band, to mitigate potential losses. Our initial target price will be $673, aligning with the forecast and the upper Bollinger Band. To refine the strategy, we'll incorporate RSI signals. If the price drops and the RSI falls below 30, indicating an oversold condition, we'll hold the position with a revised stop loss at $666. Conversely, if the price rises and the RSI reaches 75 or above, signaling an overbought condition, we'll take partial profits at $677 and move the stop loss to break even. The final target price, contingent on sustained upward momentum and confirmation from both RSI and Bollinger Bands, will be $681. This tiered approach allows us to capitalize on the upward trend while managing risk through strategic stop-loss adjustments and profit-taking opportunities. Based on the historical data and forecast, Solana demonstrates an overall upward trend, consistently testing and bouncing off the support price of $168. The RSI consistently fluctuates, nearing the overbought territory of 80, indicating strong buying pressure. The Bollinger Bands show the price moving within the upper band for most of the period, further supporting an upward trajectory. Considering these factors, I recommend a long position strategy. We will enter a long position at $177 on May 26, 2025. The stop loss will be set at $173 to protect against potential pullbacks. The initial target price will be $183, aligning with the forecast for June 1, 2025. To refine this strategy, we will incorporate a dynamic target price based on the RSI and Bollinger Bands. If the RSI reaches 80, we will partially take profits at $181, securing gains while maintaining a portion of the position. Simultaneously, we will adjust the stop loss to $175, locking in profits and reducing risk. If the price breaks above the upper Bollinger Band, we will increase the target price to $183. This adaptive approach allows us to maximize returns while effectively managing risk, capitalizing on the upward momentum of Solana. Based on the historical data and forecast, Dogecoin demonstrates a sideways trend with price fluctuations between the support of $0.215 and the resistance of $0.234. The RSI fluctuates around 60, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I recommend a short-term contrarian strategy. We will enter a short position at $0.235. The stop loss should be set slightly above the upper Bollinger Band at $0.237 to avoid being trapped in a potential breakout. The target price will be the support level of $0.215, aiming to capture a significant portion of the recent trading range. To refine the strategy, we'll incorporate RSI signals. If the RSI reaches an overbought level above 80, we will initiate a short position at the current price. Conversely, if the RSI falls below 30, indicating an oversold condition, we will consider a long position. For this specific scenario, with the RSI currently around 60 and the price near the upper Bollinger Band, a short position at $0.235 with a stop loss at $0.237 and a target price of $0.215 appears to be the most efficient approach. This strategy combines Bollinger Bands for identifying potential reversals and RSI for confirming overbought/oversold conditions, optimizing risk-reward ratio and maximizing potential returns. Based on the historical data and forecast, Cardano has shown a volatile trend with periods of consolidation and minor upward movement. The RSI fluctuating between 49.9 and 68.1 indicates that the asset is neither strongly overbought nor oversold for extended periods. The Bollinger Bands show that the price has been oscillating within the bands, suggesting sideways movement. Considering the forecast for the next week, the price is predicted to hover around $0.758 to $0.771. Therefore, a strategy combining RSI and Bollinger Bands will be implemented. The strategy involves entering a long position when the RSI falls below 40 and the price touches the lower Bollinger Band. The entry price will be $0.758. A stop loss will be placed just below the support level at $0.744, setting it at $0.73. The target price will be set at the resistance level of $0.808. If the price reaches $0.808, the position will be closed, securing profits. If the RSI rises above 80 and the price touches the upper Bollinger Band, a short position will be considered with an entry price of $0.771, a stop loss at $0.80, and a target price of $0.744. This combined approach leverages both indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI consistently hovers above 50, indicating bullish momentum, but nearing overbought territory, above 70. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands. We will enter a long position when the RSI dips below 65 and the price touches the lower Bollinger Band. The entry price will be $0.267. The stop loss should be set just below the lower Bollinger Band at $0.248. The initial target price will be the upper Bollinger Band at $0.282. To refine this strategy, we'll implement a dynamic target adjustment. Once the price reaches $0.282, we'll move the stop loss to break even, $0.267, to protect profits. If the price continues to rise, we will set the next target price at the resistance level of $0.275. If the price falls back below $0.267, the position will be closed. This approach combines the momentum from the RSI, the volatility signals from the Bollinger Bands, and the support and resistance levels for a high probability, high return investment in TRON. Based on the historical data and forecast, SUI has been exhibiting a sideways trend with periods of volatility. The RSI consistently fluctuates around the 60 to 70 range, indicating neither strong overbought nor oversold conditions. However, the recent dip on May 25 brought the RSI down to 49.3, suggesting a potential short-term oversold scenario. Considering the forecast prices, we anticipate a slight downward pressure initially, followed by a possible rebound. Therefore, I propose a moderately bullish strategy focusing on short-term gains. We will enter a long position at $3.77, capitalizing on the potential rebound. A stop loss will be set at $3.6 to mitigate potential losses if the downward trend persists. The target price will be $3.87, aiming to capture a reasonable profit within a short time frame. To refine this strategy, we'll incorporate the Bollinger Bands. The current price is near the lower band, reinforcing the oversold signal. If the price breaks below $3.6, the stop loss will be triggered. If the price reaches $3.87, we'll take profit. This strategy combines RSI and Bollinger Bands to increase the probability of success. The portfolio will allocate 60% to this strategy, 20% to a conservative strategy that holds the position until the end of the forecast period, and 20% to a high-risk strategy that aims for a higher target price of $3.94 with a tighter stop loss at $3.7. This diversified approach balances risk and reward for optimal returns. Based on the historical data and forecast, Chainlink exhibits a downtrend with fluctuating volatility. The RSI consistently hovers around the 50 to 60 range, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands indicate increasing volatility, with the price often touching the upper band but struggling to sustain above the resistance level of $16.7. Given the forecast showing a continued descent to $15.5, a short selling strategy is recommended. I suggest entering a short position at $16, placing a stop loss at $16.7 to protect against a potential reversal, and setting a target price of $15.3, aligning with the established support level. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI reaches above 60, it signals a potential pullback. The bottom of the Bollinger Bands is at $12.8, which is a good opportunity to cover the short position. Therefore, I recommend a portfolio that combines the short selling strategy with the RSI and Bollinger Band signals. The entry price is $16, the stop loss price is $16.7, and the target price is $15.3. If the RSI reaches above 60 or the price touches the bottom of the Bollinger Bands, cover the short position. This portfolio aims to capitalize on the downtrend while mitigating risk through strategic stop loss and target adjustments based on technical indicators. Based on the historical data and forecast, the graph shows a slight upward trend with periods of volatility. The price has been fluctuating between a support level of $0.108 and a resistance level of $0.122. The RSI values indicate that the asset is generally within a neutral range, occasionally approaching oversold conditions. The Bollinger Bands suggest that the price is currently near the upper band, indicating potential for a pullback. Therefore, I propose a moderately bullish strategy focusing on short-term gains with defined risk management. My strategy involves entering a long position at $0.113, capitalizing on the slight upward trend and the recent bounce from the support level. The stop loss should be set at $0.108, just below the support level, to limit potential losses. The initial target price is $0.122, aligning with the resistance level. If the price reaches $0.122, consider taking partial profits and setting a trailing stop loss to protect gains. If the price shows signs of further upward momentum, a secondary target price of $0.131 can be considered, but with tighter risk management. This strategy combines RSI and Bollinger Bands analysis with support and resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Avalanche has been fluctuating within a range bounded by the support price of $22.6 and the resistance price of $25.2. The RSI indicates periods of both overbought and oversold conditions, with recent values suggesting a slightly bearish momentum. The Bollinger Bands show that the price is currently approaching the upper band, indicating potential resistance. Therefore, I recommend a short-term contrarian strategy focusing on strategic entries during periods of slight oversold conditions. Specifically, I suggest entering a short position at $24 with a stop-loss order placed above the upper Bollinger Band at $26.6. The target price for this short position should be set near the support level at $22.6, aiming for a profit of $1.4 per coin. To refine this strategy, I propose a portfolio combining the short position with a cautious long position. Given the forecast price hovering around $23.8 to $24.0, consider a long position entry at $23.8, with a stop loss at $23.5 and a target price at $24. This long position aims for a modest profit of $0.2 per coin. Combining these two positions creates a diversified approach, mitigating risk while capitalizing on short-term price fluctuations. The overall portfolio strategy balances potential gains with risk management, leveraging both short-term bearish signals and the possibility of a rebound towards the forecast levels. Based on the historical data and forecast, Render has been fluctuating within a range, with support at $4.65 and resistance around $5.17. The RSI consistently hovers around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a slight upward trend, with prices ranging from $4.74 to $4.84. Considering the Bollinger Bands, the price has been oscillating within the bands, indicating moderate volatility. I recommend a long position entry at $4.77, coinciding with the first forecast price and a slight dip within the Bollinger Bands. A stop loss should be placed at $4.65, right at the support level, to limit potential losses. The target price for this trade should be $4.84, aligning with the highest forecast price and a potential resistance level. This strategy combines the upward forecast trend with the support and resistance levels and the Bollinger Bands. This approach aims to capitalize on the anticipated price increase while mitigating risk through a well-defined stop loss. The overall strategy is a moderate risk, moderate reward approach suitable for a stable investment portfolio. I anticipate a profit of $0.07 on this trade. Based on the historical data and forecast, Aave demonstrates a clear upward trend. The price has consistently challenged and broken through resistance levels, and the forecast for the next week indicates continued upward momentum, potentially reaching $294. The RSI consistently remains above 50, suggesting bullish sentiment, and although it occasionally approaches overbought territory, it hasn't triggered a significant reversal. The Bollinger Bands have been expanding, indicating increasing volatility and confirming the upward trend. Therefore, I propose a long position strategy. My recommended strategy is to enter a long position at $270. Given the upward trend and the potential for further gains, I suggest a stop-loss order at $261 to mitigate potential losses if the price reverses. The initial target price should be $286, aligning with the forecast high for the week. If the price reaches $286 and continues to show strength, a second target price of $291 can be set. This strategy combines trend analysis, RSI signals, and Bollinger Bands expansion to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Kava exhibits a downtrend, with the forecast indicating a continuation of this trend. The RSI consistently remains below 80, indicating that the asset is not overbought, while the bottom of the Bollinger Band suggests potential oversold conditions. Considering the support price of $0.41, a strategic approach would be to initiate a short position when the price approaches the $0.41 level and the RSI dips below 40. Specifically, enter a short position at $0.419. Place a stop-loss order slightly above the recent high, at $0.422, to limit potential losses if the price reverses. Set a profit target at $0.398, aligning with the forecast price and providing a reasonable return. To refine this strategy, we can incorporate the Bollinger Bands. If the price touches the lower band, indicating an oversold condition, and the RSI is below 40, it strengthens the signal for a short position. A portfolio combining these three strategies would prioritize shorting when the price approaches $0.41, the RSI is below 40, and the price is near the lower Bollinger Band. This multifaceted approach leverages multiple technical indicators to increase the probability of success. The entry price is $0.419, the stop-loss price is $0.422, and the target price is $0.398. Based on the historical data and forecast, Ethena exhibits a sideways trend with volatility. The support price consistently remains at $0.35, while the resistance fluctuates around $0.417. The RSI values hover around the mid-range, indicating neither strong overbought nor oversold conditions. Bollinger Bands show periods of contraction and expansion, reflecting the price's fluctuating volatility. The forecast for the next week suggests a stable price around $0.383 to $0.384, further supporting the sideways trend. Considering these factors, I recommend a range-bound strategy focusing on short-term opportunities within the $0.35 to $0.417 range. My proposed strategy involves a combination of RSI and Bollinger Band signals. First, when the price touches the support level of $0.35 and the RSI falls below 30, enter a long position at $0.35. Set a stop-loss at $0.34 to mitigate potential losses. Target a price of $0.417, aiming to capture the upward movement within the established range. Second, when the price touches the resistance level of $0.417 and the RSI exceeds 70, enter a short position at $0.417. Set a stop-loss at $0.42. Target a price of $0.35 to profit from the downward correction. This combined strategy seeks to capitalize on short-term price swings within the established range, balancing risk and reward for potentially high returns. Based on the historical data and forecast, Arweave has been fluctuating within a range, with support at $7.4 and resistance around $8.04. The RSI indicates a generally neutral to slightly oversold condition, hovering between 48.8 and 64.5. The Bollinger Bands show periods of contraction and expansion, suggesting volatility. Considering these factors, a combined strategy leveraging RSI and Bollinger Bands is recommended. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, signaling a potential oversold condition. The entry price will be $7.38. A stop-loss order will be placed just below the lower Bollinger Band at $6.58 to limit potential losses. The target price will be set at the resistance level of $8.04, aiming for a significant gain. To refine this strategy, we will incorporate a second long position when the RSI exceeds 70 and the price touches the upper Bollinger Band, signaling a potential overbought condition. The entry price will be $7.53. A stop-loss order will be placed just below the upper Bollinger Band at $8.73 to limit potential losses. The target price will be set at the support level of $7.4, aiming for a significant gain. This combined strategy allows us to capitalize on both oversold and overbought conditions, maximizing potential returns while managing risk effectively. The portfolio will be 60% of the first strategy and 40% of the second strategy. Based on the historical data and forecast, EOS exhibits a downtrend with increased volatility. The price has been fluctuating within a range bounded by a support price of $0.728 and a resistance price of $0.776. The RSI indicates that EOS is currently in neutral territory, but approaching oversold conditions, with values ranging from 44.4 to 66.8. The Bollinger Bands suggest periods of high and low volatility, with the price occasionally touching the upper and lower bands. Given this analysis, I recommend a contrarian strategy focusing on short-term opportunities within the defined range. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will enter a long position when the RSI falls below 20 and the price touches the lower Bollinger Band, indicating a potential oversold condition. The entry price will be $0.752. A stop-loss will be set just below the support price at $0.728 to limit potential losses. The target price will be set at the resistance level of $0.776, aiming to capture a bounce from the oversold territory. If the RSI exceeds 80 and the price touches the upper Bollinger Band, we will enter a short position with an entry price of $0.777, a stop-loss at $0.776 and a target price of $0.752. This approach balances risk and reward, capitalizing on short-term price swings while adhering to predefined risk management parameters. Based on the historical data and forecast, THORChain demonstrates a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates above 50, nearing overbought conditions on several days, particularly around May 21st and May 25th, with readings above 80. The Bollinger Bands indicate periods of high volatility, with the price frequently touching or exceeding the upper band. Considering these factors, I propose a strategy focusing on short-term momentum trades with a cautious approach. We will implement a combined RSI and Bollinger Band strategy. The entry price for a long position will be $1.99 when the RSI falls below 30 and the price touches the lower Bollinger Band. The stop-loss will be set at $1.95, just below the support level, to mitigate potential losses. The initial target price will be $2.07, aligning with the recent resistance level and the forecast price for May 27th. If the price reaches $2.07, we will move the stop-loss to the entry price $1.99 to secure profits and allow for further upside potential. A second target price will be $2.09, based on the forecast price for June 1st. This combined strategy leverages both momentum indicators and price action signals to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Zcash exhibits a strong upward trend. The price has consistently broken through resistance levels, and the forecast indicates continued growth. The RSI values have generally been above 50, with recent spikes above 70, suggesting bullish momentum. The Bollinger Bands have been widening, indicating increased volatility and potential for further price movement. Considering these factors, a bullish strategy is warranted. We will implement a tiered entry strategy to capitalize on potential pullbacks. The initial entry point will be $50.1+ on May 26, 2025. A stop loss will be set at $46.2+, just below the established support level, to protect against unexpected downturns. The first target price is $54.7+, aligning with the forecast for May 29, 2025. To further maximize returns, we will employ a trailing stop-loss strategy. Once the price reaches $54.7+, the stop-loss will be adjusted to $50.1+. If the price continues to rise, we will set a second target price at $58.6+, based on the forecast for June 1, 2025. A final stop-loss of $54.7+ will be set to secure profits. This multi-stage approach allows us to capture significant gains while mitigating risk. This portfolio combines the strengths of all three strategies, optimizing for high returns and risk management.